All right, welcome back to Accounting 2. We're finishing up Chapter 13, and we're doing the journal entries for 13.4, paying off the taxes we withheld. If we take a look at it, the vision that I use, and I've used the example dump in the bucket, I look at it this way. And it doesn't always work out as clean and simple, but I like to think of taxes as like a big bucket, right? And I've got individuals where I've been withholding either social or Medicare or whatever, or maybe it's the company here and I have been matching social or Medicare or whatever, and I've been holding on to that over time. Maybe I hold it and every month I go ahead and then dump the bucket out, right? Put the taxes in, dump the bucket out. Some of the taxes I maybe go ahead and dump it once every 3 months, right? But in theory, I have all these buckets dealing with, social and Medicare and employee income, and unemployment federal, and so on and so forth. All these little buckets, all these liabilities that I have, and then eventually I'm going to dump the bucket. Well, that's what I'm doing now. It's time to dump the bucket. So I'm on page 389. I like the work together for this one. It says cash payment journal is given in the working papers. Instructor will guide you through blah, blah, blah. The company is Digital Supplies, and we're dealing with payment of this stuff on March 31st. Okay? It's got federal unemployment or federal employee income tax and Social Security and Medicare, and this is all from a payroll register, right? The employee income tax number is what it is, and we don't really have to do anything with it. However, the social and the Medicare number, I have to now double it, right? I have to come up with the employer's part because the numbers listed in the textbook are only the employee part. So I'm going to start my transaction March 31st, 2019. And again, page 389 in the textbook, it says I have employee income tax payable. Employee income tax payable. Now, the word says federal income tax payable, and honestly, I wish the textbook didn't do this, because in Chapter 14, we are going to calculate the corporate federal income tax that they have to pay. They should have written employee income tax payable in page 389, but they didn't, so they make my job a little tougher. A liability has a normal credit balance. Well, it's like we're hitting the trip meter and we're setting that account balance to zero, right? Just like paying off an accounts payable, we're going to set that accounts payable to zero. We're going to set this liability to zero. So we're doing a debit of $13.86 to this liability. Next up, we got Social Security tax payable. Okay, this $13.2205, that's the amount that I have taken out of my employees' paychecks. I have to match every single one of those dollars as an employer. So the amount that's going to the government is $2,644.10, right? Half from the employee, half from the employer. I turn around and got to do the same thing with Medicare. Medicare tax payable. According to the payroll register, I've taken $309.25 out of my employees' paychecks. I got to match it, so I got to come up with a total of $618.50. When I add all of those taxes together, I'm writing out one check to the government for $4,648.60. Again, dumping the bucket, going to the IRS, and I'm doing that monthly. Just dependent on the size of this business, I got to do that monthly. And to finish up, that was check number 383. I got to write out check 401 for dumping the bucket for federal unemployment taxes. Now, This one, I'm going to dump the bucket once every 3 months, so the numbers seem a little bit bigger. So on the 31st, I have unemployment tax payable federal, and I look at the instructions, and the instructions say I have a total of $511.75 sitting in the balance that I owe the government. So write out one check, because that's a different department than, say, the IRS. And the instructions say you got to do the same thing for your state unemployment. So on the 31st, I have unemployment tax payable state. That's check 402. The instructions say I've been setting aside money, $3,454.34. So cut the check, $34.54.34. Right? We'll jump forward to look at a cleaner screen, a little cleaner handwriting than what I got going on. But again, we're dumping the bucket, setting these taxes to zero, and then we'll do it again. Some of these we'll do it 4 times a year. Some of these we'll do it once a month. So here is a cleaner look at our first set of payroll. Here was the employee. Here is the employee and employer. Here's employee and employer for Social and Medicare. Those amounts, writing out a check for $4,600. And then we write out one check here for unemployment going to the federal government, write out a different check going to the unemployment state government. Okay? When done, each of these liabilities are now zero. Okay? Don't worry about the dates here. I didn't read the instructions closely enough to figure that out, but go ahead and hit the pause button on the video for me, and then go do the 13-4 on your own, right? Remembering that the federal employee income tax payable is what it is. You got to double the Social Security, you got to double the Medicare, and instructions will tell you how much is coming out in unemployment, federal and state. So hit pause, crunch out the on your own, and then turn the video back on, and we'll take a look at the answers. All right, welcome back. Here's what we got for 13-4 on your own. Right? Employee income tax, we're setting that account to zero to the tune of $1,052. We have the employee side plus the employer side. That's why our new balance is $2,008.80. Hitting the trip meter, setting that liability to zero. We doubled Medicare, so $469.90. Add all 3 of those numbers together to write out one check. And again, this is paid cash for liability. Okay, we are dumping the bucket. Okay, dumping the bucket and sending the money to the government. We go ahead and dump the bucket for federal and state. Write out those individual checks. And that is 13-4. Paid cash for paid cash for liability.